You thought running a business in America would be just like back home. No, and 50 individual state tax departments would like a word. If you're on an E2 or EB5 visa and you're running a US business, congratulations. Your QuickBooks file is not just accounting anymore. It's legal evidence, and the USCIS would like to read it. You thought running a business in America would be just like back home. No. The IRS, the USCIS, and 50 individual state tax departments would like a word. And no, your cousin CPA who files W-2s for Uber drivers is probably not the best person you want guarding your right to live in the USA. I'm going to tell you exactly what visa holder accounting actually looks like, the 7 mistakes that quietly torpedo visa renewals, and how to build books so clean USCIS stops asking questions. Tough love starts now. Here's the thing nobody tells you when you land at JFK with a fresh E2 stamp or a shiny conditional green card from an EB5 visa. In the United States, your accounting is no longer a tax exercise. It is an immigration exercise that happens to involve numbers. A US citizen messes up their books. They owe the IRS some money, maybe a penalty, maybe a stern letter on nice government stationery. You mess up your books, you can lose your right to live in this country. Same forms, same software, widely different stakes. I'm not saying this to scare you. Scratch that. I am saying this to scare you. Fear is apparently the only thing that gets people to take their chart of accounts seriously. So let's talk about why this is different, and then we'll talk about what actually to do. A US citizen's books answers 1 question. How much do I owe in tax? A visa holder's books answers 5. How much do I owe in tax? Is my investment actually substantial and at risk? Am I generating more than marginal income? Am I creating or preserving the jobs I promised? Can I prove every dollar came from a lawful source? 5 years ago, in another country, in another currency. When USCIS or a consular officer looks at your business, they are not asking, did this person pay their taxes? They assume you did. They're asking, does this business match the story this person told us to get the visa here in the first place? That is an entirely different test, and your books are the primary exhibit. For E2 holders, the story is, I invested a substantial amount of my own traceable money into a real operating, non-marginal US business that I direct and develop. Every word of that sentence shows up on your balance sheet, your profit and loss statement, your payroll register, and your fixed asset schedule. If your books don't tell that same story, your visa renewal has a problem. For EB5 holders, the story is even spicier. I invested $800,000 of lawfully sourced capital into a new commercial enterprise that has created or will create at least 10 full-time jobs for qualifying US workers within the next 2 years. Did you hear what I just said? Now ask yourself, does your current bookkeeper know any of what that means? Yeah, I thought so. So what do they actually look at? Because I've seen the request for evidence letters, and they're not subtle. Number 1 is source of funds. They want a paper trail from the original dollar, where it was earned, how it was taxed, which bank held it, which exchange rate applied, all the way to the US business account. Not the last bank statement, the origin, 5 years back, sometimes even more. If your books can't trace it, you pay a forensic accountant $30,000 to reconstruct it later. Ask me how I know. Number 2, at-risk capital. Your money has to be actually committed and actually at risk of loss. That means it can't be sitting in a CD pretending to be invested. It has to be deployed in equipment, payroll, leases, inventory, and operations. Your balance sheet tells the story. If it shows $400,000 parked in cash for 18 months, the USCIS notices. Number 3, more than marginal income. So this is tied to E2. Your business must generate more than just enough to support you and your family. This is measured on your tax returns and your P&L. If you're running your personal lifestyle through the business expenses, it may be cute back home, but it's dangerous here. You might be documenting your own marginality, literally. Number 4, job creation. 10 full-time positions. Full-time, meaning 35 or more hours a week, filled by US workers. Not you, not your spouse, not your kids. Your payroll records, your I-9 file, your W-2s, these are all the evidence, not a spreadsheet you made last week. Contemporaneous records maintained in real time. If your payroll provider is a cousin with a spreadsheet, you have a problem. 5, material participation, direct and develop. You can't just own the business, you have to run it. USCIS looks at whether you're actually directing operations, signing authorities, board minutes, payroll records showing you being paid as an officer, expense reports in your name, vendor contracts you executed. It adds up in your books. Or it doesn't. Number 6, foreign asset reporting. Once you're a tax U.S. resident, and most E2 and EB5 holders become one fast via the substantial presence test, you owe the IRS reports on everything you own back home. FBAR through FinCEN 114 if your foreign accounts top $10,000. Form 8938 for larger asset thresholds. Form 5471 if you own 10% of a foreign company, which, spoiler, most of you do. And then there's Form 3520 if your mom wired you a gift over $100,000 for your business. Miss one, $10,000 penalty. Miss it willfully, up to 50% of the account balance per year. It's not a typo. That is American tax policy. Mistake number 1. My CPA said it's fine. Your CPA is a tax professional. They are not an immigration professional. Their job is to minimize tax liability. Your job? Staying in this country. And it requires the opposite instinct. You need to document more, deduct strategically, and never ever look marginal on paper for the sake of a smaller tax bill. Saving $4,000 in tax is a bad trade for losing a $500,000 investment and getting 60 days to leave. Mistake number 2, commingling personal and business funds. In many countries, this is normal. In America, on a visa, it is visa ending. Your investor capital must flow into the business's accounts from your traceable accounts and stay there, period. Mistake number 3, cash basis sloppiness on an accrual basis story. If you're pitching USCIS a growth narrative, your books need to support it under accrual accounting. Revenue recognized when earned, expenses when incurred. Otherwise, your P&L looks like a roller coaster designed by a caffeinated toddler, and your growth looks random. Mistake number 4, no contemporaneous payroll records. I've said it twice. I'll say it 3 times. If your job creation evidence is a spreadsheet dated the week before your I-829, the USCIS will notice. They read a lot of these. They know what payroll records look like. Mistake number 5, deducting like a citizen. Aggressive home office deductions, personal vehicle running through the S-Corp, meals that are suspiciously weekly. A citizen might get away with this for a decade. A visa holder gets audited, reclassified as marginal, and loses status. Don't. Mistake number 6, ignoring state-level obligations. Federal compliance is only half the fight. State income tax, franchise tax, sales tax, unemployment insurance registration, workers' comp. Each state is basically its own little country that believes your tax treaty is adorable. Pick the wrong state, rack up penalties, and suddenly your business is not in good standing. And guess what? Good standing is something USCIS asks about. Mistake number 7, filing as a non-resident when you're a resident, or vice versa. The substantial presence test does not care about your visa. It counts days. Most active E2 holders meet it. All EB5 conditional residents meet it from day 1. Are you filing a 1040 NR when you should file a 1040? That's a red flag the IRS reads with glee. And that IRS record sits in the file the USCIS can request. All right, enough doom. Let's see what it looks like when we actually do things correctly. Because the truth is, visa holder accounting done right is not that hard. It's just different. And most of it comes down to one word: defensibility. Not optimization, not aggression, defensibility. Every number in your book should be traceable to a source document, and every source document should support the story your visa is built on. Here's what that looks like in practice. Dual purpose books. Your books serve 2 masters, the IRS and USCIS. Build your chart of accounts so the same ledger answers tax questions and immigration questions without gymnastics. Separate capital contributions from revenue. Tag investor-funded expenditures. Track job creation headcount as a KPI inside the accounting system, not on a post-it note. A permanent audit trail from the source. Every wire in, every capital call, every equipment invoice, every lease, scanned, indexed, retained for the life of the visa plus 7 years. You are building an evidence file that future you can hand to a lawyer on a Tuesday and not panic. Real payroll run through a real provider from day 1. Gusto, ADP, Paychecks, doesn't matter. What matters is that there's an unbroken record of W-2 employees. If you hire your 10th full-time employee this year, I want to be able to prove it in 30 seconds. Quarterly compliance reviews, not annual. Waiting until tax season is waiting too long. A quarterly review catches drift before it becomes evidence. Marginality, at-risk deployment, job counts, state filings, all of it needs quarterly eyes. Pre-immigration and pre-renewal tax planning. Before you trigger U.S. tax residency, there are moves, dispositions, trust structures, basis resets, timing of foreign income. That can save 6 figures. After residency triggers, those moves are gone. Plan before, always before. Treat every tax return as a USCIS exhibit. Your 1040, your 1120S, your K1s, the USCIS can and does request them, which means aggressive deductions that look fine to the IRS still have to read well to a USCIS officer. That's a different bar. And that's the playbook. Unsexy, methodical, boring in the best possible way. Boring books keep you in America. This is what we do at Numeratus. We are not a general tax shop. We are not your cousin CPA. We specialize in accounting compliance for E2 treaty investors, EB5 immigrant investors, and the small to mid-sized U.S. businesses they build. That means source of funds documentation built to USCIS evidence standards from day one. Dual purpose chart of accounts designed so your books answer the IRS and USCIS questions without translation. Contemporaneous job creation tracking for EB5 on the I-829 and the E2 renewals. FBAR 8938, 5471, 3520, all the alphabet. Handled as a matter of course, not as a panicked April surprise. Pre-immigration and pre-renewal tax planning that actually considers your visa status, not just tax bracket. If your accountant has never said the phrase material participation or at-risk capital in the same sentence as your visa, you are technically flying blind. We fixed that. If you got this far, you're already the kind of person who takes this seriously, which means you already know what to do. Go to numeratus.us, book a consultation. We'll review your current setup, tell you exactly where the gaps are, and give you a defensibility roadmap. Because your accounting isn't just about money anymore, it's about staying here. If you like this video and want more content on E2 and EB5 visas, check out my last video in the playlist. Link in description. Same tone, same tough love, probably more footnotes. I'll see you there.